All right, guys, welcome back, traders. Today is July 7th. It's about 11:15 in the morning, and the chart that you see up here is natural gas. Now, what I want to show you today is a couple things. A, trend reversals. B, inventory reports. And C, why sometimes good levels don't work out. So I'm going to back out here to a 1 hour level. All right, you can see natural gas. We are kind of in this like precipitous downtrend. However, what I see is I see a low and I see a lower low. But on the RSI, I see that low, but we have a higher low. And that is suggestive that we are lessening in strength to the downside. Now, if we're looking for a trend reversal, what we need to see is a higher high put in place and a breach above 60. And that's what we have this morning. But I'm going to explain to you why we have that this morning, okay? So I don't see a breach above 60 after that lower low is put in place, even though we've rallied from here. And so I'm not high on getting long for a long-term play unless I see that. However, this morning that happened. So let's go into a 15-minute chart. When I look at a 15-minute chart, guys, there's 4 reasons why price changes. It is a rally base rally, a rally base drop, a drop base rally, or a drop base drop. Those are the key things that we look for here at Trading Price. And what you can see here is a drop base drop. And when we come into that level, well, let me talk about 2 things. A, when we come into that level, we are at 85 on the RSI. Okay, so we're very, very strong on that level. However, what the third thing is these inventory reports. And on Thursdays at 10:30, we have inventory reports come out. And I want to show you what the inventory report shows. The inventory report shows that we had a 74 billion consensus, but it only came out at 60 billion. I'm going to round out about 20% less on the market than what was expected. So you have this massive rally in price, right? You have this massive rally in price that is a result of that inventory report. And this happens every Thursday at 10:30 on natural gas. And there's a couple things here. A, we were able to take this opening range breakout trade, which we describe in detail inside of Trading Price, and we caught a lot of this long, not the whole way up, but we were able to catch a lot of it, resulting in about $800 in profit. However, and I think it was $175 in risk. So not a bad reward to risk ratio. However, we were not willing to take this long, even though we're in a downtrend. Even though we're in a downtrend, we see this divergence happening on a 1 hour chart. And that is indicative that we may potentially be changing trend. Now, we don't know, it's not confirmed until we make a higher high in price and a higher low in price. So we have the higher low in price, but up until the point where price rallied, we didn't have that higher high. Now we do. But the reason why we didn't take this trade was because on the time frame that we were trading, drop base drop, when we come in, guys, we are at 86 on the RSI with a potential trend change. And the RSI at 86, that is not a trade I'm willing to take on the back end of an inventory report. And guys, this is something that I talk about inside of Trading Price all the time. But those 3 things are indicative of natural gas potentially moving upward in a big way. And there's not a lot of stoppage here up until this rally-based drop here for price to run. Now we may draw back, of course, on the back end of inventory report, but the likelihood, the odds suggest that we're going to continue to move up based on the RSI and based on there not being a really quality supply zone anywhere near where we're at. So guys, with that, these are just some of the things that we use inside of Trading Price. And you can always check us out. Obviously, subscribe to us on YouTube if you want to find out more about why we trade, how we trade, things that we do. And always on Facebook, and of course at tradingprice.com. All right, guys, take it easy.